This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back to Invest Like a Pro. This is Joe Rabil. I'm going to give you a stock market update looking at the SPY. I'm going to look at it in multiple time frames. And the question you want to ask yourself right now is the market turning up or is it turning down? And I'm going to show you how it's actually doing both. It's in one time frame, it's turning up, and another time frame, it's turning down. So let's go ahead and go through this and look at these details. First, I just want to mention, if you're interested in learning more about my approach to my methodology, I would say the way to get started is to buy the book. I've got it in a discount form right now in an ebook format. If you go to rabilstockresearch.com/book, you can find out more information about that. Okay, so I want to start with the market conditions. And what's crazy is last week I showed how the sentiment dropped. The bull-bear spread dropped to 17 from around 25 or 26 in 1 week. And then in a 1 week, it flipped right back up. So I used to put the bulls in parentheses. Now I'm just putting last week's number. I think it's an easier way to look at this. We can see that it definitely jumped up in terms of the number. So, I think we've got to take that into account. And that is part of the type of environment we're in, where we're getting, I think the likelihood is we have some kind of a trend, a range forming, because people aren't getting too bearish or too bullish. They're quick to change. Not a strong conviction level right now. Now, if we go to the overbought, oversold, it's right in the middle here. It's in the neutral camp. And in fact, if you look at all the market conditions, everything is in neutral. I don't know that we've ever had that happen before, but everything that I look at is flat out neutral right now. And we're right in the middle. Now, if you notice what happened, we got really oversold down at 18. In fact, both of these were down around 18. And this has worked its way back up to neutral, while the short-term daily has RSI 5 has worked its way up to overbought, and it's actually trying to work that off right now. Now, where I think when we talk about what's taking place in terms of a reversal, this is what's intriguing me, because on a daily chart, we were in a downtrend, and now it's starting to try and turn up, and the average true range is actually starting to drop. Now, it's neutral because this line isn't rolling over. If the moving average shifts to the downside, then this will flat out turn back to the positive side, because you'd have a lower risk environment when the volatility is declining. Now, it could be short-lived or something like that, possibly, but just looking at the dynamics of this reversal, if in fact this does roll over and we don't have any violent selling, I'm going to get into that in a lot of detail in a minute, but we don't get a lot of violent selling, we don't have a lot of big bars. This is a pretty good sized bar. If we have more of those, then this is going to turn right back up and stay high. You see what I mean? So we want to watch the volatility and the size of these bars, not only what they're doing, but the size of them as well. If we look at the weekly, it's doing the opposite. You see how it crossed above the moving average, but the moving average is still declining. So we're starting to get increasing size in the size of the bars. Now, this week's bar is not very big, and it's right underneath the 18, but we're not getting a big negative reaction yet. I mean, we might be starting one, but we need a little bit more time here to see. And if the bars go back to getting small again, then this is just going to drop right back down, stay low, and this will drop right back down below. So we have to watch and look for a little bit of follow through. And if we get that, then we want to act. All right. Now, I think what we want to be on the lookout for is this moving back up into resistance. If it's able to carry a little higher, we want to watch and see how this looks, because if the volatility stays high, that's where the risk really starts to increase. And I'll just show you an example. If we go back to 21, the end of 21, we had a move up and a pullback and a move down. And the volatility was going up and it stayed up through the pullback and the new high. See what I mean? We could go to another move up here and test this high. If the volatility stays high, that would be incredibly bearish. So we got to be on the lookout for that. It's something we're going to have to keep watching. All right, let's go to the trends, which are all really neutral right now. We're bouncing off two moving averages here where the 18 is flat. We're not, if we get any more upside strength here and both these lines are rising, I'm almost going to have to flip that to the positive side, especially because we have a pinch play developing on this time frame, and we just had 3 months to the downside, and so far we're successfully holding this 4100 level. If we go to the weekly, so here's what I want you to think about. We've got trend line break here and a trend line break here. All right. Now, I don't know if you guys remember this, but back here, we had the exact same thing happen. When the market was transitioning to the upside, we had both a trend line break on the daily and a trend line break on the weekly at the same time. So what do? What we want to try and do is frame these out. We've had a rally off this low, so we can actually put in these two trend lines, these two horizontal lines. We want to frame out what we're looking at. Right now, this weekly chart is in transition. We've broken the trend line, that's the one. We've rallied up enough to create a zig to the upside and a test of this high. So now that's the two. All right. Now, if let me switch this over because I want to make sure we're looking at the hourly. So I've got this already built up here. So we've got the one, we've got the two. Now we're in transition inside of these two lines. We could channel here. We could fail at the 18 and come crashing down through this low. If we do that, you want to be incredibly defensive if that happens. If we come down through this low, all right, you want to have portfolio parachutes on, okay? You want to have protection or something because there's going to be a massive amount of risk if we come back down through that, especially if we do it just breaking this, failing at this 18, especially when all these people got long with this strong move to the upside. So we got to be ready for that, but we wouldn't plan on that. I wouldn't expect that. I think that's a very low probability that we come diving down through that. Now, what we could do is come down and channel around, and then later, maybe next year or something like that, maybe we could do that. I'm just not expecting that to happen immediately. What we want to watch right now is if we get any more pullback or pause enough, a little bit closer here so we can call this a test, then we have a line here and we'd have a line here. And now we'd have it framed out and we'd know if we get a move through 440, that would be bullish because we'd be breaking the 18 and we'd have a 1, 2, 3 to the upside. Or we come down a little too hard, we fail at the 18 and maybe channel in here a little bit and then eventually break this to the downside. So we've got, right now you've got two different potential directions that could take place. And we don't want to guess. There's no reason to guess. Now, what I want to tell you about the momentum, the MACD did confirm this high. This made a higher high and so did this. So that's convergence, not divergence. All right. Now, we have pretty strong momentum to the downside here on this move to the downside. So the difference is that we've gotten such a vertical move that this is going to have a very hard time catching up. ADX has lag to it when this happens. When there's a lot of volatility, there's lag to ADX. So I think you got to respect price. If price can come down and hold the 18, then we got to start thinking the potential for a move back up through 440 is the way this is going to play out. But we're at a really critical point right now, and we're caught between essentially the 18-week and the 18-month. And if we pick a direction there, then that should help us find out or understand what's going to take place between now and the end of the year. Just looking at the way the MACD is reacting at the zero line and the fact that we didn't have that strong a selling, I just don't expect this to fail here and come crashing down. I think it's more likely consolidation pattern, but we'll know a lot more over the next few trading days. Now, if you look at the strength of this hourly, see this confirmation here? It's another reason why I'm not really expecting a massive drop to the downside. I think you left a lot of people behind down here. People got bearish and we went vertical. So I would think that guys are going to probably try and get long or try and do some some exposure on a pullback. I think that'll act as support on a pullback. But if I'm reading that right, then the 18-day will not re-break. I think if we re-break the 18, then the risk goes back on. The volatility on the daily probably keeps going up. And, and then this ADX is kind of coming back into force. All right. So a lot to think about, a lot to cover. Just continue to do your work. And keep a close eye on this daily chart and see if we can't either make a higher low above the 18 or we come breaking that 18. And that I think will keep you in tune with where the market is right now. All right, let me know if you have any questions. Thanks.